If you have learned debits and credits in double entry bookkeeping but still feel confused when recording real transactions, make sure to watch this video till the end. You may have been making these common practical mistakes many bookkeepers and accountants make. In this video, we will record 5 real transactions using YapBook's free accounting software, from very simple to more advanced examples, so you can understand how double entry works in practice. What you will learn in this video will guide you even when you are using any other software. If you haven't watched the YapBook's orientation video, pause this video and watch it first. In this episode, we are going to use those sections to explain double entry bookkeeping and record real transactions the way it actually works in a real business. Let's move to the core of this video. There are 5 examples we are going to record using YapBook's free accounting software. Use the software link as provided either on your mobile or computer device. The examples will move from simple to advanced. Now log in and let's post these transactions together. Let's start with our first transaction. The owner of a business introduces 500,000 naira cash into the business. Now let's record our transaction. So the journal entry will be debit cash with 500,000 naira and credit owner's capital with 500,000. You might be wondering, with all the modules in YapBooks, what should we use to record this transaction? We will be using the journal entries module. We use the journal entries module when a transaction does not originate from a sales invoice or a vendor's bill or from the banking screen. In this case, the owner is introducing cash into the business. There is no customer involved, there's no supplier involved, and no goods or services were sold. Now that we understand why we are using journal entries, let's exactly post that transaction in YapBooks. Go to Accounting module, click on Journal Entries, and post the transactions as follows. It's cash, 500,000, credit owner's capital, 500,000. This is exactly what your entries should be like in the general ledger report. If yours does not look like this, pause this video and check your entries. Let's record our next transaction. XYZ Limited paid 50,000 naira cash for office rent. We are still going to use the journal entries module in YapBooks because this payment did not come from a supplier bill or a customer invoice. It is a direct cash expense, so the journal entry ensures it is recorded correctly without misclassifying it. Now let's post this transaction in YapBooks. Go to Accounting module, click on Journal Entries, and post the transactions as follows. Debits office rent expense 50,000 naira, credit cash 50,000 naira. This is exactly what your entries should look like in the general ledger report. If yours does not look like this, pause this video and check the entries you have made. Let's record our next transaction. The business sold goods worth 120,000 naira to a customer on credit. The customer's name is BDC Limited. We will use the customer invoice module in YapBooks because this transaction involves a customer and creates a debt. Please note that when an invoice is created in most accounting softwares, a default account, which is accounts receivables, is established without you entering that account code for accounts receivables. What you will now need to do is to manually specify other accounts or accounts that will be affected. So the journal entry for this transaction will be debit accounts receivable for 120,000 naira, credit sales revenue for 120,000 naira. Now let's post this transaction in practice using YapBooks. Go to Customer module. First, set up the customer using the Manage Customer submodule because this customer does not exist yet in YapBooks. Click Add Client and enter the customer details. Click the Add button. This ensures that the customer is set up. Next, you go to the Customer Invoice submodule and click the Create Invoice button. This opens the screen to record your invoice. Enter the necessary details including invoice number, select the client you just set up, enter the invoice date, the due date, the description, quantity, amount, and pick the right revenue account from the chart of accounts and save the invoice. This is exactly what your invoice should look like. Your general ledger report should also look like this, and the AR agent summary should also look like this. If yours does not look like any of this, pause this video and check your entries. Let's record our next transaction. The business purchased goods for resale worth 200,000 naira and payment was made through the bank. We use the purchases supplier module in yearbooks because this transaction involves buying goods for resale. So the journal entry is debit inventory 200,000, credit bank 200,000. Now let's record this transaction in yearbooks. Go to vendor module. First, set up the vendor using the manage vendor submodule because this vendor does not exist in yearbooks. Click add vendor and enter the vendor details. Add button. This ensures that the vendor is correctly set up. Next, go to vendor's bill submodule and click the create bill button. This opens the screen for you to record your bill. Enter the necessary details. More importantly, since you are using the vendor bill screen by default, an accounts payable account will be created, and what you must now do is to select the inventory account from the chart of accounts. Next, let's pay the supplier. Go to banking module, vendor, select the bank, select the bill you want to pay, total amount we want to pay. In this case, it is the full amount. Choose the payment date and enter any narration in the notes. Click the record payment button and you are set. This is exactly what your vendor bill should look like. The general ledger reports and the AR agent summary should also look like this. If yours does not look like any of this, pause this video and check your entries. Now this is the last transaction. The business sold inventory to a customer for 300,000 naira. The customer paid 200,000 naira immediately and 100,000 naira will be paid later. Cost of goods sold is 180,000 naira. So the sales entry will be debit cash 200,000 naira, debit accounts receivable 100,000 naira, and credit sales revenue 300,000 naira. Now selling goods also means inventory has left the business, so we must also record the costs of those goods. The cost of goods sold is 180,000 naira, so the accounts involved are cost of goods sold and inventory. So the cost entry will be debit cost of goods sold 180,000 naira and credit inventory with 180,000 naira. We use the customer invoice module in yearbooks because this transaction involves a customer sale. It is important to note that profit is not 300,000 naira. Profit will be the difference between the sales and cost, which is 300,000 naira minus 180,000 naira, which is equal to 120,000 naira. Let's post this transaction using yearbooks. Go to customer module to set up the customer using the manage customer submodule because this customer does not exist yet in yearbooks. Add customer and enter the customer details. Click the add button. This ensures that the customer is fully set up. If you already have the customer set up in yearbooks, skip this part. Next, go to the customer submodule and click the create invoice button. This opens the screen to record your invoice. Enter the necessary details. More importantly, since you are using the customer invoice screen, by default, an accounts receivable account will be debited, and what you must do is to select the revenue account from the chart of accounts and enter 300,000. Next, let's receive money from the customer. Go to the banking module, receive money, select the bank, select the invoice we want to receive money from. The total amount in this case is not the full amount of 300,000 naira, but 200,000 naira. Choose the payment date and enter any narration in the notes. Click the record payment button and there you go. This is exactly what your customer invoice should look like. The general ledger report and the AR agent summary should also look like this. If yours does not look like this, pause this video and check your entries. This is not, however, the final posting to be made for this transaction. We need to record the cost of goods sold worth 180,000 naira using the journal entries module. Remember? Now go to the accounting module, click on journal entries and post the transaction as follows. Debits Cost of goods sold 180,000 naira and credits inventory 180,000 naira. This is exactly what your entries now should look like in the general ledger report. If yours does not look like this, for this transaction, pause this video and check your entries. Let's look at your income statement report. What do you notice? Now, there are common mistakes with this type of advanced transactions in real life. Recording only cash received, ignoring cost of sales, and forgetting inventory reduction. If double entry has ever confused you, it is not because you're bad at accounting, it is because you were not shown how it works in real business situations. In the next video, we will continue the case study and we'll look at customer invoicing, where you will learn how to deal with partial payments and refund, discounts and prepayments, credit notes, late payments, and overdue balances. Follow the playlist to learn accounting the way it is actually done. I'll see you in the next video.